Good morning. I hope your morning is going well and better than mine, because I was exactly on time this morning, but in completely the wrong venue. So I landed up in Century City, had to rush back here, so thank you very much to the conference organizers for accommodating me and my poor planning. This morning I'm going to talk about, give you an economic outlook, and how the global, but more specifically the local economy is likely to perform, and that will have some impact on how the higher education system in turn performs. And my theme is really that we are looking for light at the end of the tunnel, because it's been a difficult couple of years. It really has been. If you think back 4 years now, when we had COVID, obviously, which shut down the entire global economy, presented very specific challenges in your sector, in the higher education sector, which has always been traditionally a high-touch, high-contact kind of environment. As we came out of that COVID lockdowns, shutdowns, we saw massive supply chain issues, which again might have impacted your businesses. Globally, goods were stuck in ports, the trucks didn't move, there weren't enough people to work in the logistics world, big drama. Soon thereafter, we had the Russian invasion of Ukraine. Obviously, that sent commodity prices sky high. The oil price went all the way to about $130 a barrel. We had a surge in inflation. Food prices went up sharply everywhere. And in response to that, central banks in most countries hiked interest rates quite dramatically. All right. And if you think about South Africa, the repo rate went from 3.5% to 8.25%. In the United States, their short-term interest rate went from 0 to 5.5%. So big jumps in interest rates, obviously making the economic environment quite difficult, making it, putting pressure on businesses and households. So it's been a tough couple of years, but it does look like we're now moving through that kind of environment. And so let's start with kind of what's happening globally, and then we'll focus more on what's happening locally. Oh, I should add, obviously, I shouldn't forget this. 2022, 2023, South Africa saw record levels of load shedding. Feels like a distant memory now, but it was pretty intense, right? It was stage 4, 5, 6 load shedding, major disruption to our economy, to the operating of businesses, including higher education. All right, so really quite a few things that went wrong over the last couple of years. Now, where are we today? The first point to make is just that inflation globally has started coming down quite a lot. So this is just the US example on this chart. By the way, us economist types, we like showing charts like these. Can be a bit baffling sometimes, but I'll try and explain what's happening. Green line is inflation in the US. And you can see it was pretty stable for about a decade before COVID, and then we had that big jump in inflation, that green line going up all the way from about 1% to above 5%. As you can see, it's now coming down quite nicely. What does that mean? It means that the interest rate response, and there you can see how interest rates went up from basically 0 to 5.5% in the US, that interest rate response can now be unwound. And in fact, last night, the US Central Bank, the Federal Reserve, actually cut interest rates for the first time in many years, and they cut interest rates by 50 basis points. So we're already starting to see the beginning of a global interest rate cutting cycle. Okay. And I don't need to explain this to you, but lower interest rates, generally good for businesses, generally good for consumers, good for students who have student loans, etc., etc. Right. So there's a specific reason why we care about about the US, and that is that the US interest rate is the most important in the entire world, right? And that's why I'm starting my presentation with America and not with South Africa. Why is the US interest rate the most important? Because the US currency is the most important, and the interest rate is ultimately just the cost of borrowing, a dollar. And the dollar remains absolutely the dominant currency internationally, used for trade, used for commercial activity, used for pricing commodities, used for financial markets, the works. And obviously there are moves to some countries to diversify away from the dollar. It's a whole separate discussion. The bottom line is we are very, very far from that happening, right? So the dollar remains the most dominant currency. As you can see on this chart, this is an index of the dollar, so it just looks at the dollar versus a bunch of other currencies that America trades with. But you can see it's been a case of a strengthening US dollar over pretty much the last decade or so, and then again after COVID. So it's a general upward trend, but after COVID, quite a pronounced jump higher. And that is mainly because US interest rates increased quite a bit more than other countries, right? And money is a bit like water. Water flows downhill, money flows uphill. Money flows to where the returns are better. So if you've got higher interest rates in the US, it's going to attract money. But now, as the US central bank is starting to cut interest rates, as I said, they cut by 0.5% last night, you're starting to see that dollar index kind of declining a bit. Money is going to start flowing out of the US and starting to come to places where interest rates are relatively higher, right? Places like South Africa, because of course we have not cut interest rates by as much or at all, nor are we likely to cut as much as the US. The good news is we are in South Africa, kind of on the cusp of a couple of important positive changes. Right. So one of them is the interest rate story. So let's just dig into that. As I said, the Reserve Bank hiked the interest rate from 3.5% to 8.25%. That's a pretty high interest rate, and obviously that puts a lot of pressure on. I'm sure most of us have a mortgage bond, a car loan. A lot of small businesses have loans. It just puts pressure on the economy quite generally. And of course, the reason why the Reserve Bank increased interest rates by this much is because inflation went up as much. You can see that gray line. Inflation was 3% during COVID. Obviously, that's a bit of an outlier, but it went up all the way to 7.5%. Okay, and that resulted in the Reserve Bank taking this action of raising interest rates quite sharply. But inflation has come down, and inflation has in fact come down all the way to the Reserve Bank's target, which is 4.5%. So we don't need interest rates at these kind of levels anymore, and therefore this afternoon the Reserve Bank's Monetary Policy Committee will cut the repo rate by 25 basis points. Okay, and here too we're going to start seeing the beginning of a downward trend in interest rates. Now, as I mentioned, I don't think the Reserve Bank is going to cut as much as their American counterparts. That is because the American counterparts have a dual mandate, so they have a very specific focus on not just inflation, but also employment, and they're starting to worry about a weakening labor market, so they're going to be quite a bit more aggressive in cutting interest rates. In South Africa, the Reserve Bank has an inflation mandate. So they're going to set the interest rates based primarily on the inflation outlook, but also, and this is the good news, but also the South African outlook is actually improving. The growth outlook, the economic activity outlook is actually improving, whereas in the US, as I said, there are concerns that it might be deteriorating. So why is it improving? And you can see it here. These are confidence indicators. So this is the Bureau for Economic Research in Stellenbosch University. And since, this goes all the way back to the 70s, every quarter they ask consumers and they ask business people, how are you feeling about the economy, how are you feeling about your own situation, how are you feeling about, the outlook for the next 12 months or so. And that gets put together into this index. The dark blue line is the business confidence index, and the dotted green line is the consumer confidence index. Right. First thing to note is both of these indices are quite depressed. So the business confidence index, 50 points on the right-hand axis, 50 points is neutral. The consumer confidence index, 0 is neutral. So both these indices are below their neutral levels. People are, on balance, quite depressed. They're not specifically quite excited about life in South Africa. But that thing has been improving in both cases. Right? So both business confidence and consumer confidence is starting to improve off a low base. What's happening? Well, obviously, I think people are sensing that in South Africa too, there is light at the end of the tunnel. People are sensing that we have come through this election, which was very uncertain. Potentially, all kinds of interesting things could have happened. But what we ended up with is a very centrist, very moderate coalition government, okay, which we call a government of national unity, but it's a coalition government. And it's a coalition government that has put reforming the economy, growing the economy, making it easier to do business, fixing infrastructure at the center of its mandate and as its priority. And obviously, if you're a business person, that is quite exciting. It's quite exciting to have a government in place that is really, really focused on getting the economy going, right? Because if you look back over the last decade, South Africa's economic growth rate averaged about 0.8%, right? We were crawling along for the last decade. It really is time for us to start walking and then eventually, hopefully, running. Okay. So there is a sense that things are improving. There's a sense that confidence is improving. I think we all feel it. We've all had these discussions. We've read the newspaper articles, etc. This is quite a positive story. And key to this improving story is fixing infrastructure, right? Because that is really, if we kind of, this country has a lot of problems. But if you think about it from an economic point of view, what are the biggest challenges to the economy as opposed to sort of broader societal problems? The biggest challenge to the economy is inadequate infrastructure, right? And infrastructure is basic. It's a basic stuff, but without it, you really cannot function properly. And obviously, number one is electricity, right? It's very difficult to run a modern, sophisticated economy when you don't have reliable electricity. So on this chart, the blue line is Eskom's electricity output. You can see it's a steady decline over the last decade. It's down almost about, at one point, was down almost about 15% over the last decade. And bear in mind, over this period, the economy grows. So electricity demand keeps growing, but Eskom's output is falling, right? And that's why you end up with stage 6 load shedding. But you can see quite a nice improvement in Eskom's own output. It does look like they've stabilized things. They've put in new management, not just at the top level, but also at the individual plants. So there's a real noticeable improvement in Eskom's performance. But the big change was that the government has allowed, and this happened about 2 years ago, the government allowed private companies to produce as much electricity as they want. Previously, you had to apply, and it was a whole long process, and then the government said, look, go for it. Produce as much electricity as you want, whether you put up solar panels on the roof, or whether you build a wind farm somewhere, or you purchase from a third-party provider. So essentially, we've really opened up the electricity market. It used to be monopolized by Eskom. Now it is basically a free-for-all. Right? There's lots of players in the electricity market. There's lots of self-generation. It's become quite a dynamic space. And needless to say, billions and billions of rands of investment have gone into private energy, private electricity projects, right? And there's a massive pipeline still in the works. So this is a 10-year story of investment in electricity generation by private companies, and pretty soon we'll also start seeing investment in transmission. Because, of course, the problem we have in South Africa is that our best solar, the best area for solar power is in the Northern Cape, best area for wind power is in the Eastern Cape, but these two areas don't have a lot of grid access. So the big challenge is going to be extending the grid, connecting the grid. The grid is obviously very much focused at this stage on Mpumalanga, where all the coal-fired power stations are. So that's the one challenge where I can say, we can give it a tick. We're making very good progress. But then look at Transnet's performance, the green line. That's the Transnet rail service, okay? That has actually done worse than Eskom, which we don't necessarily feel as ordinary people because we don't use the train on a day-to-day basis. But if you're a company reliant on rail transport, in other words, if you're a big miner, coal mine, iron ore mine, etc., this is your reality. That's the performance of Transnet. It was down 30% from over the past decade. Right? So this is a massive headache. Logistics is a massive headache for companies that have to move big items, big bulk items like coal, iron ore, all kinds of mining, agricultural produce, etc. So here too, we're in the early stages of starting to improve the performance of Transnet, but more importantly, of starting to get private sector participation, right? Private companies running trains, private companies starting to run the ports. Not privatizing in the sense of selling off these assets, but getting companies to run, to use this infrastructure and run their own services on this infrastructure. As I said, it's still early days, but it is quite optimistic. And then you can run through a whole bunch of other forms of infrastructure. There's bulk water, there's digital infrastructure, et cetera, et cetera. The key message is more private sector participation, right? Because these areas have traditionally been monopolized by the state, and the state has not done a good job, right? So now if we can open up space for businesses, for entrepreneurs to get involved here, you're going to see quite a bit of growth. Okay, so this is the one thing where I think we're all quite optimistic about what the Government of National Unity can do. And I think a very important point to make is just that a lot of this actually precedes the GNU. And that's why I'm quite optimistic, because the GNU might not last, right? There might be a fight over some piece of legislation or some piece of politics, and the GNU falls apart. But these kind of initiatives actually predated GNU, which gives me confidence that they will be maintained, even if there is a new kind of coalition configuration that emerges over the next couple of years. Bear in mind, we have a local government election in 2 years from now, and I think that could be an event that kind of reshapes the political landscape. Okay. It's not all good news because, or sort of moonshine and roses, because one of the things that the government must do is reduce its fiscal deficit, right? This chart is interest payment as a percentage of tax revenue. In other words, for every rand that SARS collects from you and I, 20 cents goes towards interest payments. And that is because the government has borrowed so much money. Okay, so that's a huge challenge. Get those debt levels under control in order to reduce this number so that you're not ending up spending so much money on interest payments. Okay. Implication, though, is that there's pressure on services. There's pressure on health. There's pressure on education. And I'm sure you're all feeling it in terms of budget allocation from government towards universities. It's tight, right? There was a newspaper article a couple of days ago about Western Cape having to potentially retrench teachers. This is what's happening, right? Because interest payments are eating up the budget. But the only way that you can stop this from escalating is you actually have to reduce your borrowing levels, right, to pay less interest. So this is kind of the less exciting part of the GNU. This is the hard yards. This is difficult stuff. This is not politically popular, but it has to happen. It has to happen. Okay. Commodity prices, just very quickly, South Africa remains a commodity exporter. Commodity prices have not been particularly helpful. We had a big spike, as I said, when Russia invaded Ukraine. That really was great for South Africa. But where we are now, our commodity price index It's more or less back to pre-COVID levels. So what this suggests is really that we are not in territory where the rest of the world is bailing us out. We're in the kind of territory where we have to make do ourselves and really get our own house in order. Okay. The longer-term outlook for South Africa, I think there are still things that are quite positive. Now, the one thing is, if we can just, I don't know if going back, I mean, the one thing is that commodity prices will turn at some point, right? If you think about this whole green transition, you know, all the investment that has to go into moving us from dirty electricity to clean electricity globally, you know, that should be supportive of commodities, especially things like copper, but also some of the battery minerals, manganese, chrome, etc. So there is potential for commodity prices to improve at some point in the future, which will be good for South Africa. And then we also have this demographic tailwind, right? So what this chart shows is it's the ratio of 15 to 19-year-olds, so people who are basically about to enter the labor force or about to enter higher education, compared to people who are about to retire. Okay, so in other words, a country that has more young people relative to old people is a country that has some sort of inherent dynamism. Okay? And bear in mind that in most systems, the young must support the old. It's the taxes that the young pay that support the retirement of the elderly. So if this ratio moves against you, some countries have problems. And you can see right at the bottom, there's China, obviously one-child policy. It's completely messed with their demographics. South Africa still has a very favorable demographic profile, lots of young people, relatively few old people. Our challenge is just to get jobs for these young people. But if we can do that, you know, we do have a demographic tailwind, whereas most other rich countries are starting to flirt with quite problematic demographic pictures. In other words, too many old people, not enough young people. I mean, China's population is already shrinking. Same is true of Germany, Italy, South Korea, Japan. These are all countries that what we call the population pyramid is now starting to actually invert. Okay, final point from my side, and I think this is relevant in your area since so much of your procurement is imported. Is the outlook for the currency. Now, this green line is obviously the rand-dollar exchange rate. The blue line is an estimate, just an estimate, so take it with a pinch of salt, of where the currency should actually be trading if it was at fair value. And we estimate that by looking at inflation differences between countries. But basically, you can see the rand is still quite cheap, right? It's currently, I think today it's about 17.50. Fair value is around 15, somewhere between 15 and 16 to the dollar. So there is room for the rand to improve. Obviously, it'll depend a lot on the international environment. It'll depend a lot on what happens to the US dollar, as I explained, US interest rates. But there's no reason why we cannot, in the next 12 months, 12 to 18 months, end up with the rand closer to 15, 16 to the dollar versus 18, 19 to the dollar. Right? And I think that is potentially, number one, it's going to be good for inflation, it's going to be good for interest rates. And as I said, in your world where you are procuring internationally, that is potentially also quite positive. So just in conclusion, I think we've come through a very difficult period globally, and more so in South Africa because of, as I said, load shedding, political uncertainty, inflation, food prices, high interest rates. A lot of these obstacles, headwinds, are now starting to reverse. And I think that is good news. Obviously, a lot of challenges remain. I mean, internationally, the geopolitical environment is clearly still quite unstable. Conflict in Israel-Palestine, Ukraine-Russia, that's still ongoing. China, US, no longer friends anymore, now starting to become enemies. I mean, that is still a kind of a complex environment. And of course, locally, we have lots of challenges. And I think one of the challenges that is really coming to the fore in the last couple of years is the impact of organized crime on businesses. We've always had high crime rates in South Africa, but it's never really been something that undermined the ability to do business. That is starting to become a problem. But again, it does feel like we are starting to unwind some of these big headwinds that we've faced over the last couple of years. So hopefully I can leave you with a positive message as you enjoy the rest of your day. Thank you very much.
Can take a few questions.
Is it time
Yeah?
for question?
Yeah, definitely. Izak Odendaal, everyone, from Old Mutual Wealth. Any questions from him? I've got a few that I'm happy to kick off with, but please indicate by show of hands, and then the microphone will come to you. Do you know what will make people even more happier with you today, Izak? If you confirm that at 3 o'clock this afternoon, when the Governor of the Reserve Bank starts delivering reflections on the MPC meeting, he's going to tell us that there's going to be an interest rate hike. Decline.
Yeah, I'll bet my house on it.
Bet your eyes on it. 25 basis
25
points?
basis points. So they're going to start off very gradually because it's number one, it's an inherently conservative institution, for better or for worse, but I think for better. You know, they don't try and rock the boat. But as the cycle continues, I think what you might see is that inflation is actually falling quite quickly, especially in the last, let's say, 2 or 3 weeks. You would have noticed that the oil price has fallen a lot, right? It's gone from $80-ish to the dollar per barrel. It's now sort of in the 70s range. Okay, so that's a big, plus the rand is stronger, so there's a big drop in local petrol prices. That's going to feed into lower inflation. And I think, so as the inflation outlook improves, there's actually room for them to possibly speed up the cutting cycle, but they'll start with 25 basis points. And I expect, you know, let's say a year from now, that the repo rate will have gone from 8.25% to around 7%. And you can add on another 3.5% to calculate the prime rate. So prime rate around 10.5%.
Yeah, I tend to agree. From what I've heard and read, 25% seems to be a sure bet. He's also made a point of saying that just because the Fed is going one way, EU is going the other, does not mean that they're going to follow suit, because the Fed cut their rates by 50 basis points. So hoping for 50 basis points will be too much of a waste of time, hey?
Yeah.
All right. So that's even better news, you see, 25 basis points cut by 3 o'clock this afternoon. Let me ask this then. You acknowledge that growth is slow, and part of the growth being slow would be the systemic challenges we have in our economy, which can also be addressed by investing in infrastructure. You made examples with electricity, for example, and freight rail and all of that. How do we borrow less and reduce our debt to the world so that that percentage goes back towards the 2010 levels, which are very nice in this country, but at the same time invest in infrastructure so that we can unleash growth, which ultimately is what we want?
Yeah. So that is a challenge, right? So as you're saying, the government has to cut its borrowing. The only way you can cut your borrowing is either you hike taxes or you cut spending. Okay. So they've ruled out, mostly they've ruled out tax increases, which means that the pressures on the spending side, and as I explained, that means spending on services, health, education, etc. So there isn't actually much money there's some money, but there's not an unlimited source of funds for the government to spend on infrastructure. And that means it becomes all the more important to leverage private sector investment, because there's a huge appetite for private sector to invest in infrastructure, and that is the private sector. I mean, both companies. So if you think of Kumba Iron Ore, I mean, Kumba is reliant on the Session Railway line. That line is not performing. So I would imagine a company like Kumba is desperate to get involved and run their own trains on that line. So it'll be on the company side, but also on the pension fund side, because pension funds love infrastructure. I'm talking internationally now. Pension funds love infrastructure as an asset class because it gives you a very nice, steady, long-term return. So there's also a lot of appetite, and there's a lot of money, obviously. South Africa has a big pension fund industry, so there's a lot of money sitting on the sidelines ready to invest in these infrastructure projects, but you can't just invest in any old thing. It needs to be properly packaged, properly designed, properly governed, etc. So I think we're still in the early
And is that where the shortcoming is? Because the ANC is very keen on accessing pension fund funds in order to invest. But if you're sitting with pension fund, you're going, wait a minute, I'm happy to spend however many millions, but I don't have the right product yet that assures my clients of a future return.
So I think there's a disconnect because the politicians say, well, there's all this money in the pension fund industry. How can we access this money? And the pension fund's saying, we want to invest, but we want a return. And how you get these two together is to design the projects and to package them in a way that satisfies the societal needs, but also generates a return. I'll give you an example if there's time. So those of you from Gauteng, I mean, the Gauteng toll road debacle was a big blow, right? I think from a motorist point of view, maybe you're happy that the toll roads have been scrapped. But if you look at it from the other perspective, here is an infrastructure project that was going to deliver a return based on the cash flows of people paying the tolls every day. And now that's been scrapped, and that just creates uncertainty around future projects. You know, if you invest in this project, will you get the cash flow, or will the politicians buckle and not make the users pay? So I think, we're still in the early stages of getting this right. I've just come back from India, and they have absolutely waxed this model of private sector participation, private-public partnerships, concession models, and everywhere you look, infrastructure is just exploding. There's just massive construction everywhere. So we'll get there, but it's a process.
And then to use your earlier example of Kumba, for example, who is very interested in having infrastructure working, has money that they probably were interested in investing there. How do we ensure that the private sector investment into projects benefits whole of society and not just the narrow economic objectives of that company? And I suppose Telkom would be a good example of that, right? Where it was a public entity, in the main privatized with government a significant shareholder still. It serves the economy and the needs of trying to grow this economy, but it's in private investment in the main.
Yeah. So I think the way to think about it is to remember that even if it's, again, to use the Kumba example, so even if it's a company that's using this infrastructure for their own benefit, for their own profitability, there is a benefit to the state in terms of higher tax revenues. There's better employment. I mean, Kumba itself had to retrench, I think, about 400 workers because it couldn't move enough iron ore on the railway line. So the iron ore was busy heaping up at the mine, couldn't get this iron ore down to the port, and therefore it had to cut production, and people lost their jobs. So there's a very direct social benefit if these companies, and I mean, just this week, Seriti Coal has announced, I think, another 1,000 retrenchments. And that is also the direct consequence of not being able to ship coal from the mines in Mpumalanga down to Richards Bay. So that's where the societal impact is. But it is important to remember that some forms of infrastructure are economic infrastructure and have to generate an economic return, and other forms of infrastructure are social. And the burden of providing social infrastructure remains with the government, right? The government cannot, and different layers of government, so national, provincial, local. So you cannot expect that in your street where you live, we're going to privatize that road and make it a toll road. That's just never going to happen, right? So that road, your street where you live, that's always going to be the responsibility of the municipality.
And yet in Joburg they tend to do by just gating that road. Don't worry, that was just a provocative statement I was making there.
Yeah.
Any questions for Izak? You all happy? Has he given you a glimmer of hope? All right, there's a lot of nodding hands. We have a question right there. Microphone coming to you.
Hi, thanks, Africa. You expressed optimism about two traditionally state-controlled functions accepting private players, freight rail and electricity generation. One that we'd be very interested in is education. What are your thoughts about the entrance of private players into the tertiary education sector? how it will affect the delivery of education, tertiary education, and also what do you think it means for the tertiary institutions?
Okay, so just to caveat, I'm not an expert on higher education at all, but my general feeling is that it is positive because you are providing a different kind of product, probably, potentially a product that's much more tailor-made to a certain kind of student. And I think in general, it's safe to say that demand for higher education outstrips supply. And maybe one of the things we haven't gotten right in this country is not just the level of supply of higher education, but also how we tailor-make it to the needs of different students. So we all know, for instance, that everyone wants to go to university, but students are reluctant, or students see vocational training as maybe as, secondary or less prestigious or whatever. So there's also a bit of a mind shift that has to happen, I think, among students. But ultimately, more supply is good, more options would be good, different options, and I think COVID taught us that maybe you can deliver education in different ways and different mechanisms. So I think that's good. I think innovation in that sense is positive. I'm not sure if you'll agree with me, but again, I'm not the education expert.
I learned yesterday, by the way, that as of this year, there are more students registered in universities than there are at TVET colleges, which I must admit worries me because it should be the other way around. We should have an overwhelming number of students at TVET colleges and a select number of students at universities. I hear a microphone. There you go. Yes, sir.
Yeah, thank you. We have seen some encouraging moves on the rand-dollar exchange rate in the past few days. Is it proper to attribute that to the expected announcements this afternoon? Or we are still going to see the rand going towards that 16, 15 level that you were talking about?
If I can actually complement that question, how much of the volatility of the rand at times is a factor of local and domestic issues versus the friendship between China and America, for example?
Yeah. Okay, so two good questions. Let me answer your question first, and then it'll feed into answering your question. Generally speaking, the rand-dollar exchange rate depends a lot more on what's happening internationally. Right, so we tend to see the rand-dollar exchange rate as the share price of the country, but it's not. It really depends on what's happening with the US dollar. As I showed you, the US dollar appreciated quite meaningfully over the last decade, and as a result, the rand weakened over the last decade. And so did the currencies of pretty much all other countries, especially other emerging markets. However, over the from 2022 onwards, the rand weakened a lot more than its emerging market peer group. So if you compare the rand with Brazil, Mexico, Indonesia, India, and so on, we actually performed quite a bit worse than them. And the reason, I think, a couple of reasons, but I think the one reason was because of a very, very dire load shedding situation, which really just, frankly, made us the laughing stock of the world. Number two, I showed you the commodity prices that came down quite a lot, which tends to hurt us more than some of these other countries. And number three, we did not increase interest rates as much as some of these other countries. So to use Brazil as an example, they went from 2% to 13%. We went from 3.5% to 8.25%. And obviously, as I said earlier, higher interest rate tends to attract capital, tends to support your currency. So for those three reasons, we actually underperformed in 2022, 2023, other emerging markets quite dramatically. This year has been the reverse. This year we've outperformed. Okay, the rand has actually done better than Brazil, Mexico, India, etc. And I think the reason is, again, because we are starting to unwind some of those headwinds that I spoke about, specifically the political uncertainty, the electricity situation, and also some of those other countries have started to cut interest rates. Now, to get back to your question, typically markets are kind of forward-looking, So if you are making an investment decision today, you're trying to think where the world will be 6 months from now, 12 months from now, etc. So a lot of the shifts in interest rates, the relative shifts, have already been priced into the markets. But I still think there's room for the rand to continue, because I do think the dollar will continue softening. And as I said, I think the Fed, the US central bank, will cut by less than our central bank over the next 12 months. So that should continue to give the rand support as that gap actually widens between our interest rates and the interest rates.
On load shedding, and I'm not name dropping, but I was being interviewed by Richard Quest for his travel show. And we were sitting at Kirstenbosch Gardens waiting for the setup to finish. And he says, in which world do you live in a country where you know at 4 o'clock this afternoon you will not have electricity for 2.5 hours, possibly 5 hours, and you still have Cyril Ramaphosa as president of this country? Which actually was a very key question, because I think as a nation, we're not holding our political leadership to account enough for the damage that they're causing economically to this country. But that's for me to say and for you not to tweet. I think that was the final question for you. Yes.
Sorry?
Oh, sorry. I can't
have
see
the-
you.
May
Do
I
you
have
mind
the last
standing
question?
up? There you are. Thank you.
Thanks. For me, I would like to hear his perspective from the automotive industry. In terms of the observation, we found that Germany has invested a lot of money in terms of automotive, in terms of Mercedes-Benz, BMW, and then they had a lot of market share in South Africa. Now that trend now is going to the negative, where now a lot of cars from China are eating up that market share, which now is threatening the employment rate in South Africa based on the investment of Germany. Then from your perspective, what is the outlook going forward? That now they are showing the market share, but they have not invested a lot, and what will have an impact in terms of the employment rate and also the economic outlook going forward? Thanks.
And also, when are we going to get a major Chinese car being built in South Africa?
So that is a question that's been asked not just here but everywhere, because China has emerged in the last 2 years as the world's biggest exporter of cars. And one of the reasons why is because obviously they produce a lot of cars, but they're not buying a lot of cars. So the Chinese producers like BYD, Haval, all these cars, and by the looks of things, they're pretty nice cars, pretty good, high quality vehicles. But China's just producing too much. And so they have to export to the rest of the world. And so you found that the US, Canada, Europe have slapped major tariffs on Chinese exports, specifically of electric vehicles. Okay. We haven't really seen electric vehicles in South Africa for reasons that you alluded to, you and Richard Quest alluded to. But this is a challenge, right? So China's become a dominant exporter, and it's taking market share everywhere. So to answer your question, when are we going to see Chinese cars being produced in South Africa? The problem is our market is pretty small. So for a company to come and set up a factory, there's an assembly plant in Kucha, as far as I know. But to actually set up a factory where they build the cars, I mean, you basically need not just South Africa, but the entire African continent as your market. So it might, and which a lot of these German and American manufacturers actually do. They use South Africa as a base, not just for the local market, but to export to other places, specifically other places where they drive on the left. So to answer your question, it is a threat, and it's a threat internationally. It's a big issue internationally, politically, and I don't know at what point we start manufacturing it. Bear in mind that auto manufacturing in South Africa is heavily subsidized. So it's also a case of whether those companies can crack with the government and get the subsidies and get the support programs.
No, for sure. I know you had a question, but can I ask that we take it offline, only because I just clocked his watch and I see that I need to break for tea now. Is that all right? Okay. Thank you very much, everyone. A round of applause, please, for Izak Odendaal from Old Mutual Wealth. Thank you for those